Hello and welcome to my channel. In today's topic we'll be discuss about which stocks is best for beginners. So without any delay, let's dive in this video and watch full video to know about it. So in our first stocks is 1. Vanguard Total Stock Market ETF. A. Diversification. VTI offers exposure to the entire U.S. stock market, encompassing thousands of stocks across various sectors and industries. For beginners, this level of diversification helps spread risk, as the performance of one individual stock is less likely to significantly impact the overall investment. B. Low cost. VTI has a low expense ratio, which means investors pay minimal fees to invest in the fund. This is particularly advantageous for beginners who are just starting out and may have limited capital to invest. Low fees ensure that more of the investment returns are retained by the investor rather than being eaten up by management fees. C. Simplicity. Investing in VTI is straightforward. Beginners don't need to worry about picking individual stocks or managing a complex portfolio. By investing in VTI, they gain exposure to the entire U.S. stock market with just one investment. D. Passive management. VTI is passively managed, meaning it seeks to replicate the performance of a benchmark index rather than trying to outperform it. For beginners who may not have the time or expertise to actively manage their investments, a passive approach can be more suitable and less stressful. E. Historical performance. Over the long term, the U.S. stock market has demonstrated a strong performance. By investing in VTI, beginners can benefit from the overall growth of the market without the risk associated with picking individual stocks. F. Reinvestment of dividends. VTI automatically reinvests dividends back into the fund, allowing for compound growth over time. This can accelerate the growth of the investment and is particularly beneficial for long-term investors, including beginners who are investing for the future. Therefore, overall, Vanguard Total Stock Market ETF, VTI, offers beginners a simple, cost-effective way to gain exposure to the U.S. stock market while benefiting from diversification, low costs, and historical market performance. Second stock is 2. Alibaba Group Holding Limited, BABA. A. Global e-commerce dominance. Alibaba is a leading e-commerce company not only in its home market of China but also on a global scale. It operates various online platforms, including Taobao, Tmall, and Alibaba.com, which facilitate consumer-to-consumer, business-to-consumer, and business-to-business transactions. This dominance in the e-commerce sector provides a solid foundation for long-term growth and stability. B. Diverse revenue streams. Beyond e-commerce, Alibaba has diversified its business into cloud computing, digital entertainment, and financial services. This diversification helps mitigate risks associated with being overly dependent on a single revenue source, making Alibaba a more resilient investment option for beginners. C. Strong financial performance. Alibaba has consistently demonstrated strong financial performance, with robust revenue growth and healthy profit margins. This financial stability is reassuring for beginners, as it indicates the company's ability to generate sustainable returns over time. D. Expanding market opportunities. China's rapidly growing middle class and increasing internet penetration present significant growth opportunities for Alibaba. Additionally, the company is expanding its presence in international markets, further diversifying its revenue streams and tapping into new growth opportunities. E. Innovative technologies. Alibaba is at the forefront of innovation, investing heavily in emerging technologies such as artificial intelligence, big data analytics, and logistics automation. These investments not only enhance the company's competitiveness but also position it well for future growth in a rapidly evolving digital landscape. F. Long-term vision. Alibaba's visionary leadership, led by founder Jack Ma and current CEO Daniel Zhang, has a clear long-term strategy focused on innovation, customer satisfaction, and sustainable growth. This strategic vision instills confidence in investors, including beginners, who seek to invest in companies with strong leadership and a clear roadmap for success. G. Accessible to retail investors. Alibaba's shares are listed on major stock exchanges, making them easily accessible to retail investors, including beginners. Additionally, many online brokerage platforms offer fractional shares, allowing investors to purchase partial shares of Alibaba stock with smaller investment amounts. Therefore, overall, Alibaba Group Holding Limited, BABA, offers beginners an opportunity to invest in a dominant player in the global e-commerce industry with diverse revenue streams, strong financial performance, and significant growth potential in both domestic and international markets. Third stock is 3. Procter & Gamble Company, PG. A. Stability and reliability. Procter & Gamble is a global consumer goods powerhouse with a portfolio of well-known brands such as Tide, Pampers, Gillette, and Crest. These brands enjoy widespread consumer recognition and loyalty, providing a steady stream of revenue even during economic downturns. For beginners, investing in a company with such stability can offer peace of mind and confidence in their investment. B. Dividend growth. Procter & Gamble has a long history of paying dividends and increasing them consistently over time. This makes PG stock particularly attractive for beginners seeking income generation from their investments. The company's strong cash flow generation and commitment to returning value to shareholders through dividends make it a reliable choice for long-term investors, including beginners. C. Resilience in various market conditions. Procter & Gamble's products are considered essential items for daily life, spanning categories such as household cleaning, personal care, and hygiene. Regardless of economic conditions, demand for these products tends to remain relatively stable. This resilience makes PG stock a defensive investment option, particularly appealing to beginners who prioritize capital preservation and downside protection. D. Global footprint. Procter & Gamble operates in over 180 countries worldwide, giving it a broad geographic reach and exposure to diverse markets. This global presence helps mitigate risks associated with over-reliance on any single market or region, making PG stock a well-diversified investment option for beginners. E. Focus on innovation and sustainability. Despite its long history, Procter & Gamble continues to innovate, developing new products and technologies to meet evolving consumer preferences and sustainability standards. The company's commitment to sustainability and corporate responsibility resonates with socially conscious investors, including beginners who prioritize ethical and environmentally responsible investments. F. Accessible to retail investors. Procter & Gamble's shares are publicly traded on major stock exchanges, making them easily accessible to retail investors, including beginners. Many online brokerage platforms offer fractional shares, allowing investors to purchase partial shares of PG stock with smaller investment amounts, further increasing accessibility. Therefore, overall, Procter & Gamble Company, PG, offers beginners a combination of stability, dividend growth, global diversification, and a focus on innovation and sustainability. These qualities make PG stock an attractive choice for those looking to build a solid foundation for their investment portfolio with a reliable and time-tested company. Fourth stock is 4. United Health Group Incorporated, UNH. A. Dominance in healthcare sector. United Health Group is a leading diversified health care company that operates across various segments, including health insurance, pharmacy benefit management, healthcare technology, and healthcare services. Its dominant position in the healthcare sector provides stability and long-term growth potential, making it an attractive investment option for beginners. B. Stable revenue streams. Health insurance is a necessity for many individuals and families, providing United Health Group with stable and predictable revenue streams. The company's diverse business segments further contribute to revenue stability, as they serve different aspects of the healthcare industry, from insurance coverage to healthcare services and technology solutions. C. Resilience in economic downturns. Healthcare is considered a defensive sector, as demand for healthcare services tends to remain relatively stable regardless of economic conditions. United Health Group's broad portfolio of healthcare-related businesses helps mitigate the impact of economic downturns, making its stock less volatile and more resilient to market fluctuations, a reassuring quality for beginner investors. D. Innovation and technological advancements. United Health Group is at the forefront of healthcare innovation, leveraging technology to improve patient outcomes, reduce costs, and enhance the overall healthcare experience. Its investments in data analytics, telehealth, and digital health solutions position the company well for future growth in an increasingly digital and interconnected world. Strong financial performance. United Health Group has consistently delivered strong financial results, with steady revenue growth, robust earnings, and healthy profit margins. Its disciplined approach to cost management and strategic investments in growth opportunities contribute to its financial strength and shareholder value creation, a positive sign for beginner investors seeking a reliable investment option. Favorable industry trends. Demographic trends, such as an aging population and increasing healthcare spending, bode well for United Health Group's long-term growth prospects. Additionally, ongoing healthcare reforms and the expansion of health insurance coverage further support the company's growth trajectory, making its stock an attractive choice for beginner investors seeking exposure to a growing industry. Accessible to retail investors. United Health Group's shares are publicly traded on major stock exchanges, making them easily accessible to retail investors, including beginners. Many online brokerage platforms offer fractional shares, allowing investors to purchase partial shares of UNH stock with smaller investment amounts, increasing accessibility and affordability. Therefore, overall, United Health Group Incorporated, UNH, offers beginner investors exposure to a stable and growing industry, combined with strong financial performance, innovation, and resilience in various market conditions. These qualities make UNH stock an appealing option for those looking to build a diversified and reliable investment portfolio over the long term. Fifth stock is 5. NVIDIA Corporation, NVDA. Leadership in graphics processing units, GPUs. NVIDIA is a global leader in designing and manufacturing graphics processing units, GPUs, which are essential components in computers, gaming consoles, data centers, and artificial intelligence, AI, systems. Its GPUs are renowned for their high performance, efficiency, and versatility, giving NVIDIA a competitive edge in multiple industries. Diverse revenue streams. NVIDIA's business extends beyond gaming to include data center, professional visualization, and automotive segments. This diversification helps mitigate risks associated with dependency on any single market or product, making NVIDIA a more resilient investment option for beginners. Exposure to high-growth markets. NVIDIA is well-positioned to capitalize on several high-growth markets, including gaming, autonomous vehicles, and cloud computing. These markets are expected to experience significant expansion in the coming years, driven by technological advancements and increasing demand for computing power. Innovation and R&D investments. NVIDIA is known for its relentless focus on innovation and substantial investments in research and development, R&D. The company continuously pushes the boundaries of GPU technology, driving advancements in AI, deep learning, and accelerated computing. This innovation-led approach ensures NVIDIA remains at the forefront of its industry, maintaining its competitive advantage over rivals. Strong financial performance. NVIDIA has a track record of delivering strong financial results, with consistently growing revenue, profitability, and cash flow. Its efficient business model and focus on high-margin products contribute to its financial strength and shareholder value creation, making it an attractive investment option for beginners seeking stable and growing companies. Long-term growth potential. NVIDIA's leadership position in key growth markets, coupled with its ongoing innovation and strategic partnerships, positions the company well for long-term growth. As industries increasingly rely on GPUs for AI, data analytics, and other computationally intensive tasks, NVIDIA is poised to benefit from these trends, offering long-term growth potential for investors. Accessible to retail investors. NVIDIA's shares are publicly traded on major stock exchanges, making them easily accessible to retail investors, including beginners. Many online brokerage platforms offer fractional shares, allowing investors to purchase partial shares of NVIDIA stock with smaller investment amounts, increasing accessibility and affordability. Therefore, overall, NVIDIA Corporation, NVDA, offers beginners exposure to a leading technology company with diverse revenue streams, strong financial performance, innovation-driven growth, and long-term potential in high-growth markets. These qualities make NVIDIA stock an appealing option for those looking to invest in the future of computing and technology. Thanks for watching my video.